All right, so we've been given information here and want to make a statement of profit or loss. So we've been given the gross profit, provision for doubtful debts, rent received, commission received, wages, salaries, insurance. Then we've got additional information here. 100 kwacha within the rent received was prepaid income. On 31st December, provision for doubtful debts was 400 kwacha, and we have accrued wages of 300. So the first thing we need to do when we make our statement of profit or loss, let's first include our gross profit there. $150,000 kwacha. So after the gross profit, you say add income, right? So as we can see here, we have rent received, although we've been told 100 kwacha within this 400 was prepaid. All right. So obviously the person paid for some months in advance. The year has ended, so maybe there are some months which haven't yet passed. So that income which the business is holding for uh, the payment for the month in advance will be treated like a liability. Since the month hasn't passed, so we can't say that we've earned that income. So we're going to deduct this 100 kwacha from the rent received. Remember, prepayments you subtract, accruals you add. So you say rent received, you're going to say 400 kwacha minus 100 kwacha. You get rent of 300 kwacha. So this 100 kwacha is going to go in the balance sheet under current liabilities. Okay. Next, we have commission received. All right. And we also have here commission receivable. So commission receivable, this is money that you are being owed and it hasn't been paid to you. So it's accrued income. Okay. For example, let's say if you enter into a contract with someone and you say, for each month you'll be paying me 1,000, and you say that will be a 3-month contract. So when you start doing the work, the first month passes. If you're not paid that 1,000, you record that as your income receivable. If the second month passes, you're still not paid, that income still keeps on growing. That's why we're calling it accrued income. If the third month passes, you're still not paid, your income is still growing. All right. So accrued income is treated like a current asset. Okay. So what we're going to do is we're just going to first add this 200 to the 1,500. So this commission received, this 1,500 we've received, it's been paid to us. Okay, but this 200 is remaining. So when it's a commission, so when it's 1,500, you get 1,500 plus 200, you get 1,700. Then this commission receivable, this 200, is going to go on the balance sheet as a current asset. Okay, let's see. Do we have any other form of income? Oh, yes. So we can see here on the 1st of January 2021, the provision for doubtful debts is 1,000. This is that we expected that from our credit sales and the people who are owing us money, we expect not to get 1,000. Right? We're estimating, right? We might not be paid 1,000. Then at the end of the year, this figure changes. On 31st December, this figure changes from 1,000 and becomes now 400 kwacha. So at the end of the year, we're saying we're expecting not to get 400 kwacha. So at first, we expected not to get 1,000. Now it has decreased and we expect not to get 400. So 1,000 minus 400, that 600 kwacha decrease in the provision for doubtful debts, we're going to treat it as a gain. Okay. And the gain is treated like income. So you're going to say decrease in provision for doubtful debts or decrease in allowance for doubtful debts. Decrease in provision, we're going to say 1,000 minus 400. That gives us 600. So we total up our income. We get 2,600. So we add this 2,600 to the gross profit. We get 152,600. So once we've done our adjustments for the income, now we can list down our expenses. So expenses, we have wages. We've been told they're accrued wages. So it means we are owing people money. So accrued wages are a current liability. Okay. Accrued income, current asset. Accrued wages, current liability. So with accruals, as you can see, with our accrued income, we added it to the commission. So even here with these accrued wages, we're going to add them to the wages amount. So I'm going to say wages. I'm going to say 900 plus the accrual of 300. We're going to get 1,200. So this 300 for the accrued wages, we find it in the balance sheet under current liabilities. Then salaries, our next expense, 2,000. And then finally insurance. So we total up our expenses. $3,700. Those are our total expenses. So to find our net profit is just our gross profit minus the expenses, the total expenses. So our net profit in this case is 148,000 900.